Hey, Richest you Money Maniacs, welcome back. In this video, we're going to talk about something very exciting. The tightening of insurance and credit in the United States. Woohoo! Really exciting stuff. All right, let's get right to it. Hey, Richest you Money Maniacs, Tom coming at you. In this video, I'm going to share with you an article that we found on AP News, and it was actually published the day I'm doing this video, so it's very recent. This is really important and really exciting stuff because not only does it describe a real challenge that's occurring in the United States because of the economic and the health crisis that we're going through, but it also exposes a really exciting opportunity. Okay, so what am I talking about? Let me read a little bit of this article to you to kind of give you an orientation of what this topic is. APnews.com says, suppliers are reluctant to ship goods without credit insurance. What does that mean, a supplier? Well, it's a wholesaler or a manufacturer shipping to a retail distributor. Okay, so like the manufacturer of toys, and they ship the toys to a mom and pop shop in a small town that sells toys, right? Those are the suppliers. The manufacturers are the wholesalers. And then the retailers are the people that they're shipping to, but they typically have insurance on that shipment because sometimes product doesn't get sold. And so it gets sent back to them, or maybe it just gets damaged on the way. Think about that too. It could get damaged on the way, and the insurance covers that. Well, because insurance is not taking on as much risk, and the credit to cover the insurance is more difficult to get because banks are restricting credit limits and they're tightening everything on loans, and the Federal Reserve is printing more money and giving it to the banks, but the banks aren't allowing people to borrow it unless you have incredibly good credit and you've never made a mistake in your entire life, which is a ludicrous qualification. But the point is, it's becoming more and more difficult to get credit or insurance to cover those shipments. So let's read the article and we'll get into the discussion. Gold Medal International is sitting on millions of dollars worth of socks at its North Carolina warehouse that it can't ship to stores. The reason? The 66-year-old family-owned sock maker can't get enough credit insurance to cover potential losses if the stores can't pay for the goods they've ordered. This is a 66-year-old sock manufacturer. People need socks. This is... Okay, I'm back to the article. Without that insurance, Gold Medal and thousands of other suppliers facing a similar dilemma would be on the hook for unpaid bills. But not shipping the goods to retailers means losing sales and big write-downs on inventory. The problem will only get worse if retailers can't stock their shelves and shoppers can't find what they want heading into the critical holiday season. Okay, this is an important point too. We're going into the holidays and you want to buy socks for your dad for Christmas, but there are no socks anywhere. Why? Because this guy can't get insurance to ship the dang socks to the stores to have them sold. That is ridiculous. Oh, okay, here we go again. I'm losing it. You gotta laugh though. I mean, this is exactly the downward spiral that all of this bad policy making on all these elected officials at every level. This is not just the Trump administration. This is at every level. This is city, county, state, all the way up. Congress, all of these dorks pretending that they know best for the economy. Ron Paul, save us. Okay. Back to the article. So before COVID-19, suppliers routinely relied on so-called trade credit insurance to get the reassurance they needed to design products, receive orders, and ship to retailers. Now with the pandemic creating so much economic uncertainty, many retailers are struggling and credit insurers are unwilling to take on the risk. In fact, many insurers will only provide protection on orders to big box stores and others that have been able to withstand the pandemic, leaving in the lurch a huge swath of non-essential small and medium retailers that are still trying to claw their way out of months of lockdowns and that decimated their businesses. Okay, so remember, 90% of the US economy are small businesses. The big box chains just don't cover that much. Yeah, it looks like they're everywhere, but the fact of the matter is small businesses are 90%. These financial gurus or wizards or hacks or whatever you want to call them at the Federal Reserve and the US Treasury and the stock market, they are all simply self-serving. They are destroying small business, and now is evidence of it. This is clear evidence that all of that stimulus money and all of that extra printing was only to protect the friends of elected officials and politicians and people with power. Everybody else, you're on your own, man. Even if you're a manufacturer who's been around and has built a business for 60 years or more that actually sustains a community, offers jobs, gives a tax base, builds parks, gives away money to donations and charities, and is a good community member and takes care of their people, it doesn't matter. You can't even ship your goods. Now, here's the caveat. In the article it says what these insurers are looking for, or what these banks are looking for now, or even what the manufacturers are saying, since I can't get the insurance, the retailer, I'm talking to you, you're the store, you're the retailer. The only way I can ship this stuff to you is if you prepay. Well, how can you prepay if you haven't sold your product yet? You haven't made any profit. You haven't been able to, make your profit, sell this, pay the sales tax, pay all your workers' compensation, pay your lease for your space for your store, pay all of the other fines and taxes and fees that come into just doing a business, like a business license in whatever town you live in, and of course the ambulance fund, and of course the Social Security fund, and all those happy taxes that get tagged on to every dollar you make as a retailer. And now you've got to make enough money to buy the goods before you order them from the manufacturer. Well, of course you're not going to be able to do that, because nobody's been doing that since the Federal Reserve was instituted in 1913. Okay, so I'm back. So what does this mean? It means that those retailers are going to have to go to a bank and ask for a loan. Guess what the bank's going to tell them? Well, you mean your manufacturer won't give you the credit, and you've been in business for 66 years with them? Why would I give you the credit? I've just met you. I don't know anything about you. In fact, maybe your business is going to be out of business soon because, well, you don't get bailed out like I do as a bank. See, I can screw up all day long. I can make mistakes all day long. And it doesn't matter because the Federal Reserve and the US Treasury are going to bail me out. But you're just a little tiny retailer. And, the law applies to you. It doesn't apply to me as a bank, but it definitely applies to you and your manufacturer friend. So good luck with that. But I'm not going to loan you the money. That will be the answer. In fact, it's already the answer. That's what's occurring in this country right now. So what does it have to do with your financial status and you mastering your finance? It's important to understand this, so that if you decide to invest in a business, or to look to try to start a business, or to look for ways to build revenue streams, you make sure you do it in a market that allows you to be able to borrow the money or have the money, get the money to get started. Now, here's a really cool solution that I thought of when I was reading this article. This is really exciting. It all comes back to a video I did a long time ago about the laser fund, which is an indexed universal life insurance piece. And here's how it could help. Because if you structure a laser fund the right way, you can literally use your laser fund as your own personal bank. And businesses do it all the time. They've done it for 100 years. In fact, Walt Disney built Disneyland using laser funds, indexed universal life insurance policies. Because the way a laser fund works is once you have money in there as a principal, you can borrow against it without the principal going down, which means the principal stays in there and keeps earning tax-free interest. And the money you borrow is tax-free. And the interest that you have to pay on the loan is deductible as a tax deduction. But you don't have to pay the loan back ever, because the death benefit covers the loans that are outstanding. How wonderful is that? So what does that mean again? Let me break this down for you as somebody who's trying to understand how to master your own finances. This is the opportunity to create a whole new industry, since banks and insurance companies don't want to help manufacturers be able to ship to retailers on a credit basis and provide insurance for that. You could become a firm that teaches these two entities how to build laser funds for themselves and use them as their own banking system. This is a whole new industry is opening up as an opportunity right here with this one thing, this restriction. What happens, right? When there's a need, that means an industry will grow out of that need to supply that need. So there is a need to be able to get a retailer to have the upfront cash to be able to purchase the goods from the manufacturer and have them shipped and get there safely. Or even if they get damaged, that it's okay that that money doesn't get paid back right away, because the laser fund doesn't require you to make the payments, because the death benefit will cover it. So you literally become your own bank and your own insurance. Now somebody's got to teach these retailers how to do that. Somebody's got to teach these manufacturers how to do that. And this guy in this article is talking about $20 million worth of stock he's got in socks that he cannot move. So if he were to go and start a laser fund for $20 million over the next 5 years, right? He could borrow against each of those annual payments and never pay it back, and use that to ensure the shipping and make sure it gets to the retailer safely. And so that even if the retailer doesn't sell all of them and they come back, he doesn't have to pay that money back. Brilliant idea, huh? Pretty exciting. It sounds like really bad news, but it actually could be a huge opportunity. So again, this is where we are, right? And there's a supply and there's a need, and you're working on learning how to master your finances, so now you know. This is one way to look at an opportunity like this and find a way to profit from it. All right, so I hope that you found this video helpful. If you have, please do me a favor and give a thumbs up on the video. Even better, if you have questions, comment down below. If you want to debate with me or you just want to yell at me, that's fine too. I'm not perfect. But more importantly, if you haven't already, please make sure you subscribe to the channel. All right, everybody, I'll see you next time.